A very good morning and welcome to Core Finance TV. My name is Malcolm Graham-Wood and today I'm doing a CEO interview. And today I'm absolutely delighted to be talking to John Wardle, CEO of Amerisur Resources. John, welcome back.
Good morning, Malcy. Thank you for having me.
It's great to see you again and taking the time out from a very busy schedule in Colombia, I might add, to come and talk to me. Why don't we first of all, I normally do an overview, but most of all, the last few months have been incredibly busy for you and for your team. Why don't you give us an overview of just what's been happening, and then we'll delve a little deeper after that.
Sure, well, you're right. It's been a very, very busy time with a great deal of progress. And our two-pronged strategy in both the Putumayo and the Llanos Basin are really coming to fruit now. An indication of how active that period has been, I guess, is the fact that share price is up 50% since October, albeit from low levels, and it's still significantly undervalued to me at the moment. But basically two thrusts. We completed the farm out with Occidental in the Putumayo, which vindicates our strategy of acquisition during the downturn. And they're going to plough in 93 million into the 4 blocks over the next year or two, and we expect great advances there, and that brings forward the programme. It takes our capex requirement away, it takes the risk off our shoulders, and obviously the resources we're looking at there are very significant, approximately 500 million barrels. And the second prong of this strategy is also coming to fruit, and that's the block CPO5 in the Llanos, where we recently announced a very significant discovery at Indico, which follows on from the discovery which was underappreciated, I think, at Mariposa, because that defined the play. And now the play is becoming very, very large. And as we announced last week, 1P reserves at Indico on a single well of almost 18 million barrels is a very significant thing. And we announced this morning that that programme is advancing very quickly. Kalau 1 has now spudded, and we expect a lot of activity there, and obviously hoping for a lot of success.
Excellent. So let's stick with CPO5. And, you know, I woke up this morning and having done all my preparation over the weekend, you've already added to. So what I was going to say to begin with was that you announced at the time of the discovery that you're going to drill potentially 4 wells from the pad that you've established here, plus at least 1 more. So today's news that you've spudded the well today is an extension. I know it's an extension sort of down the way, isn't it? Because you were telling me earlier that the fields are sort of
the big trends in the Llanos, in this area, and remember that we're next door to the biggest discovery in Colombia in the last 30 years, in Llanos 34, which are these north-east, southwest trending systems. So Indico is in the central part of what we see as our play fairway, and we're now going southwest with Kalau, which will step outside Indico. That's why it has a different name.
Yeah, it's an exploration well.
It's an exploration well, and it has risk. However, just on a structural basis, i.e., the contours that are closed within that structure, we're looking at up to around about just under 10 million barrels. However, if the play type we're looking at Indico is correct, those could be significantly larger. And then the follow-on well from that,
and that's going up the way, as it were.
It's going up the way, the other side. Check out the other side towards Llanos 34, and that is called Pavo Real 1, which is peacock.
Wow.
You can see there's a kind of Indian
that and beer.
But those are 2 exploration wells, and they're important to define the size of the play in this immediate area. And we'll follow that up with 2 further wells, which are appraisal stroke development wells within the Indico structure. Because what we found at Indico was a very thick oil column in a very high quality reservoir, but we didn't find an oil water contact.
So, assuming, that's going to be carrying on, but you also had a plan to drill the wells, 1 or 2 wells as well, which you'd need to hire another rig.
Sure.
Because you were going to drill Sol and Aguila, is that correct?
Aguila.
That's
right. The original plan was Mariposa, Indico, Aguila, Sol. And these are independent closures within the same LS3, Lower Sands 3 play. But what we're seeing now it is bigger accumulations of oil, and so the connectivity of those things is what we need to define.
Yeah.
Aguilar and Sol are still on the cards, obviously, but they may actually be connected to the Indico-Pavo complex.
Right.
We think, and we're discussing this with partners and government at the moment, that we need to bring in another rig at some point.
Yeah.
And it's looking very much like a multi-rig drilling program.
And that would be very exciting, because if you did that, presumably by the summer, you'd have a number of things going on, and you'd be development as well, as you say.
Absolutely.
So how do the economics at CPO-5 stack up in terms of, you mentioned 18 million barrels just from the one discovery. I mean, these economics must be as good as it gets in the...
It is as good as it gets. This is onshore, natural flow, light oil production. We have 41 API at Mariposa, we have 36 API at Indico. This oil is very much in demand in the basin, because the vast majority of reserves in the Analyst are heavy oil.
Heavy oil, so it mixes with, and you sell it at the...
we sell at the wellhead, total costs around about Brent minus 8 to 10. So we're netting back that, and these are very high flow rate wells because of the reservoir quality and the amount of oil in place. 5,000 odd barrels in Indico. 3,000 barrels in Mariposa, but remember that 3,000 barrels has flatlined for 15 months now.
Yeah.
So obviously the well could produce a lot more than it does at the moment. So the economics are absolutely stellar.
Yeah.
Natural flow, the OPEX is significantly less than a lifted field like Platinum. And the quality and flow rates are higher.
Yeah. And I mean, it's actually quite a large area, so to be honest, you've got no shortage of things to do in the next year or two in this area.
Absolutely. The block itself in CPO5 is around about 55,000 square hectares. All hectares are square. And that's approximately 5 times bigger than Llanos 34, where they produced over 50 million barrels and produced 55,000 barrels a day. So the scale of the opportunity is very large indeed. Excellent.
We should turn to the Putumayo, where you've done this deal with Occidental. Or Occidental Andina. How does that change things for you? I mean, when I looked at it looked like it was, not only the cash injection you just mentioned, but also bringing forward quite a lot of work that you probably wouldn't have had in the book for the next year or two, but it's now beginning to happen. So why don't you talk us through?
Absolutely, you're right, Malcy. We would not have been in a position to invest 100 million of risk capex in those exploration prospects. However, with the farm out deal with Oxy, we're going to do that. And we're able to do a much wider regional program involving a lot of drilling, a lot of seismic, and really bring forward the activity in those blocks, which have tremendous potential. As you recall, we acquired all these blocks in the downturn and at very low entry costs. And to be able to sign that with such a professional and well-informed operator, we do operate all the blocks, obviously.
Yeah.
But Oxy have a long background in the basin in Ecuador. They made significant discoveries in Ecuador, and they're very enthused about the program that we're putting in place now.
It looks like it was a natural choice, but there were plenty of other people you might have done a deal with.
Oh, absolutely. When we made the decision to go and farm, this was part of the strategy from the start. We decided to only go for big players because these are big opportunities, and we had significant interest from a number of very large regional players on the mix of technical ability, understanding, and the background in the area. Because when you partner with a big company, you're not just going there for their checkbook. You go in there for their R&D, their history, their ability to clear away administrative barriers, perhaps. It's all very important. So perhaps they weren't the highest offeror, but it was the best mix.
And it really does, prove that all those acquisitions you made when, as you say, things were looking bad, but you were buying things for next to nothing. I remember reading, deal after deal where you hadn't spent anything effectively, and you did it. So what's happening at Platanillo?
Well, Platanillo is our cash cow. It's been a tremendous field. Remember back in the 2000s, we built ourselves up to 100% there, and then really put the pedal to the metal in the development. That has generated our position today. And it's a mature field now. There's not a tremendous amount of future upside, although we are looking at a few little tricky things to get something more out of there. But that's stable, and we're heading for, we want to stay on plateau production, use the tremendous economics of export through the OBA, and use that as the cash cow that supports all our other activities.
And you've still got one or two exciting prospects up your sleeve, haven't you, for Platinum?
Oh yes.
So,
well, the Putumayo is still a very major focus for us. In Platinum itself, we have a number of prospects that we may drill this year. In Putumayo 8 alongside, we've got a very exciting Mirapariba 1 coming up.
The famously slightly late.
Sure. Well, this is the nature of things in Colombia. There's a long bureaucratic process to go through. But once you're there, as we are in CPO5, with all permits in place, it's bang, bang, bang. It's well after well.
I think, it's quite important to talk about this. I mean, we talked earlier on about you had great relationships with right up to the president.
Sure.
You even speak to each other on the phone.
Absolutely.
And he's very keen to make sure this happens. So bringing this out, that it's really a slow process to start with, and then once you get going, I think it's really important, because as you say, once you get to the stage where either it's producing or you've just done all the legwork on them.
That's right. There's a lot of upfront preparation work in terms of permitting, socialisation, environmental licensing.
Yeah.
Once you're there, it's chocks away, and we're at that stage now, similar to where we were in 2012 with Platinum, where you'll see well after well, and we're very, very excited about that.
And you talked about socialisation and so on. I mean, I joined you over there 2.5 years ago, nearly.
It doesn't seem like it, does it?
No. And we went through the areas where the FARC was still effectively potentially operating. It was slowly coming around. What's changed on that front? I mean, some people said it would never change, and the cocoa would still be there, and the difficulties of retraining and farming and everything else. What's it like on the ground?
Well, it's been a tough path when you're changing a local economy from illicit to legal. It takes a lot of government input, and we've been a major part of that. Our social programs have always been lauded. We recently won an award actually from the Chambers of Commerce, the combined Chambers of Commerce, for social management. It's improved tremendously. The issue now is to get the developments done so they can generate work in the area, and roads. We're just about to start building a road into Putumayo 9 and 12 for the wells that are coming up, the Coindu wells, and those roads act as a tremendous stimulus to the local economy. So I'm really happy. It's we were used to operating in very tough conditions. We don't see that coming back. This is a one-way road. It doesn't go back.
So, I'd like to talk about the OBA, because, of course, funnily enough, it's been rather forgotten about with all the success up north at CPO5 and so on. But actually, with all that's happened with Oxy and various places, you will be putting more crude through the ABA.
Sure.
So why don't you talk me through that? Because you've got an increase in the ABA anyway. You've just got a deal which is what must be quite close to completion for the extra amount that you're going to be able to put through. And of course, in addition to that, I know it was quite a long time ago, but I wrote about. It seemed to be a long time ago that I wrote not long after we'd been there that it looked like it was plenty of scope for selling third-party access and crude through the pipeline. So should we address those OBA topics right now?
Sure. Well, the OBA, as you say, it's kind of gone into the background a little bit, but it is a key part of our Putumayo strategy. Without efficient evacuation from this basin, we know the basin is full of oil, but without efficient evacuation, your margins deteriorate. So it was a key thing to build, and we very opportunistically we did that, and we're the only ones who have that facility, and that may well have been part of the attraction. Because it's great having acreage, but if you can't evacuate the oil at good rates, the value goes down. So it's working very well. We completed Chiritza last year, the pumping station. And we now have excess capacity, which we plan to fill in the meantime before we drill, by buying in third-party crude and selling.
Yes, because you're going to buy it in, aren't you? You're not going to tariff it as the way through for necessarily.
No, it's far more advantageous economically to buy in. The local players, the local producers, are paying very high transport tariffs.
Like you used to.
Absolutely, that's the way it was. And memories are short sometimes.
Exactly.
And But if we buy in and we give them some benefit, obviously, because we want to have a long-term harmonious relationship with those producers, and they get some benefit, but we take the lion's share, obviously, because we have the facility.
Good. A quick question on funding. It wasn't very long ago, with especially last year, except for the end of the year where the oil price was very high, that people were almost worried that you had too much money, too much cash sloshing about, and there were discussions about dividends. And Giles and people said you wouldn't rule it out if we haven't got anything to spend it on. But there's no doubt now that you've got a lot to spend it on. You've got a drilling program at CPO5, you've got a share of the Occidental stuff, and you've got other things as well. Sure. How are you placed funding-wise?
Well, we're fully funded for everything and more that we plan to do. And the emphasis there is and more. We want to very much push an accelerated development and exploration program within CPO5. Not just the Indico complex, there are many other things. There's the extension of Llanos 34 into CPO5. All these need to be pushed. We do have a very strong cash balance. We have a $30 million working capital facility. We have no debt. And obviously we generate a lot of funds out of Mariposa, Indico and Platinum. However, I don't think it's a negative point to have a positive cash balance, but it gives us the financial flexibility to push where we can.
So when you're drilling these wells in CPO5, how much do they cost and how long do they last? About 30, 40 days, I guess?
Net to us is around about 3 million.
Yeah.
And at the rates we've seen to date, 2.5 months they're paid out.
Yeah. And it's only 30 days drilling as well, isn't it?
30 days drilling.
And you're getting so much more efficient, and even ONGC are becoming efficient.
Absolutely. Well, ONGC are a very, very capable operator. This is a multinational. You see, little Amerisur now is partnered with two of the biggest oil companies in the world. They're very, very good, and their R&D backup is tremendous. Their geological understanding and their operational abilities are paramount. And we're really pleased with them. You see how quickly, we got off the short-term, long-term test transition of Indico. And on the same pad, we're drilling away now on Canal.
So I wouldn't have said before that you might have been announcing a spud date today. So that's very positive. And so you mentioned that you're in with two of the biggest international players, ONGC and Occidental. There's a lot of interest in Latin America at the moment, not just Colombia, Ecuador, but all down. Are you still seeing quite a lot of M&A? I mean, and presumably you've got your hands full right now, but you presumably wouldn't rule out anything if anything came up. Are you still seeing bits and pieces in the locality?
Absolutely. There's a tremendous amount of interest. Opportunities such as we have within our portfolio are very, very few and far between. And what we're demonstrating now is the true value of that portfolio. We built the whole thing in the downturn, as you mentioned earlier, when confidence was somewhat low, but you have to take a longer-term version of these things. And where we are now, with 1 million hectares under contract, with 1.4 billion barrels of resources, there is no other company like that. So in terms of M&A for Amerisur, it's obviously not our objective. We see a very strong, clear path to sustainable growth here in terms of production, reserves, and number of wells online. So it's not my focus. I'm here to build the business, and that's what I'm doing.
So we'll get to the final question before too long, but one of the things I noticed is that you in particular and a number of your fellow directors have been buying quite a lot of stock in the company. You're buying the shares in. It's a genuine vote of confidence. You said earlier in this interview you thought the shares were, despite being up 50%, were still significantly undervalued.
Absolutely. Well, my conviction is there. I'm very, very committed to this, and the value proposition is simply tremendous.
Sounds fantastic. Finally, I mean, I always ask the last question. You're so clearly optimistic; it's not true. What should shareholders be looking forward to, and also an idea of how you think reserves and production are going to be going in the next sort of 12 to 18 months? Would be nice if you can.
Sure. Well, we have a very exciting program with a great deal of activity in a mix of very low risk to medium risk. You should never be worried by a dry well. Dry wells happen, but they give you a lot of understanding, and then you move on. Reserves, well, the scale of the Indico discovery is still not understood by the markets. I'm absolutely certain of that. But when an independent reserves assessor gives you almost 18 million 1p on the basis of one well,
Yeah.
and that well is expected to recover just under 6 million barrels on its own,
Yeah.
the quality of the reservoir is simply marvellous. So I see reserves going up.
Yeah.
Mariposa reserves were increased by 1 million barrels this year, simply on performance, because basically we produced 1.3 million barrels out of it and nothing much changed. So I think what they did is they basically added in the production to date and gone back to the original number. But I think Mariposa will grow too. So it's a very, very positive outlook. And obviously with the Coindu drilling coming up in Poot 9 and 12, we have other opportunities there, and Mirapariba and all the other activity.
It sounds absolutely incredible, and from the numbers you're talking about, I'm sure that the people who are watching today will have been most excited. John, it's been very kind of you to come in at the beginning of what is an enormously busy week here in London.
Absolutely.
Thank you very much for taking your time to see us. It's been a great pleasure to welcome John Wardle, who's the CEO of Amerisur Resources, to Core Finance in London. My name is Malcolm Graham Wood. Thank you very much for joining, and I look forward to seeing you again soon. Bye now.